Let's take a look at Nvidia stocks today. I'll show you the volatility that's happening. I'll definitely demonstrate to you the increase in volatility and also look at the historical implied volatility. I'll show you what the market is predicting. Additionally, I'll demonstrate 3D volatility to you. As usual, I'll also show you a strategy that could help you profit, whether the stocks start rising or falling. From the beginning, Nvidia stocks have experienced a significant 15% decline over the past weeks. But this week, especially in the last 2 days, Nvidia has risen by almost 11%. This is indeed a substantial increase. Essentially, we've nullified all the declines that occurred and returned back to this trading level, to this consolidation that has been ongoing for a month. But I wouldn't rush to rejoice here because the main downward movement might start a bit later. Let's consider the volatility. What's happening here? The first, volatility has increased. Mostly it's around 50% at closer strikes. Volatility reaches 60%. This is, of course, for such a big stock that's part of the SP 500 index, an extremely high volatility. It's a lot. Consequently, insurance on this stock will be very expensive. Let's look at the volatility smile. As we can see, towards the increase, towards the volatility bump, it's not growing. There's nothing alarming here because it's a normal situation where the upside is slightly more expensive than the downside in terms of volatility. This occurs because investors hedge their risks. Let's look at the historical and implied volatility. Historical volatility is represented by the gray line and implied volatility by the white line. As we can see, implied volatility is currently above its historical values. But the trend is changing. I try to show you the dynamics of volatility changes, which is also important to pay attention to. Besides trading the underlying asset, which is the stock itself, you can also trade volatility. How can you do that? Let me show you an example and see what the artificial intelligence suggests. Yes, it offers us various strategies. Let's see what it suggests now. For instance, we choose mid-June and assume volatility will decrease by, say, 10%, which is reasonable. Here's the strategy it proposes. It suggests an interesting strategy, selling a put option with a strike of $735 and buying a protective put option with a strike of $880. Also buying a protective call option with a strike of $885 and selling a call option with a strike of $1,030. We can see how our efficiency profile will look. This strategy ensures profit as long as the stock doesn't remain stuck around the $900 level at expiration. We can also compare this with other strategies. In general, what I can show is purely for informational purposes, to demonstrate what artificial intelligence can now provide. I personally don't advise relying on bots, bloggers, or artificial intelligence. You need to trade on your own to understand how the market works, how fundamental knowledge operates, get a grasp of market derivatives, options, and only then will you truly become professionals, able to make money. Let's switch to trading volume in options. As we can see, we have a very large volume concentrated at the $900 level. Remember this level, as for me personally, it will be an impenetrable barrier. My contention is that the price may rise to $900 and then hit this value, and possibly there will be a decline afterward. We also have very large volumes concentrated in the range from $800 to $850. These are call options. Put options are the same. We have volumes from $800 to $820. Basically, I've already told you that this is an important Rubicon. If the stock cannot hold above these values, then market makers are obliged to liquidate all their accumulated assets. That is, I'm talking about when the market maker sells you call options, they hedge their sold call option by buying stock. And if this call option is not in demand, consequently, all these stocks they sell. And at the moment, of course, the situation has eased somewhat and the gamma is now in positive territory, although more neutral than positive, but this is still a positive because last Friday everything could have started to develop very badly. Let's touch upon 3D volatility as well. Here all dates, expirations, and strikes are concentrated. This shows all volatility, which professionals use to develop well thought out strategies. Let's also see what the market predicts. On the 20th of May, a month from now, the market predicts that the price will be between $800 and $850. This is where the highest probability is concentrated. So the market forecasts that within a month, we're more likely to fall to $800 than to rise. If we take a longer term, for example, July, here the market says that the stock will also be around $800 to $830. What does this tell us? Someone believes that the stock will be worth $1,000. I don't deny that. I hold a different opinion. My philosophy is that it's impossible to predict price movement. So how do you earn? You can earn through mathematical analysis and sound position management. I'm saying that you need to build a strategy so that no matter which way the stock moves, you make money. Also, I don't advise anyone to argue with the market. If the market says the stock will fall, why argue with it? For me, this always raises some doubts. You need to go along with the market, and only then do you make money. Yes, it seems illogical, like when a stock is rising, but the market says it will fall, what are the reasons? But again, if you act according to mathematics, things will start to work out for you. Now, when I suggest trading to you, I'm talking about making trades in a way that regardless of which way the stock moves, you'll profit. I'm talking about building smart strategies. Let me show you how we see it. If the stock starts to rise, for example, to $1,000, but we'll make $13,000. If the stock falls to $700, we'll still make $12,000. That's what smart position management is all about. That's what I'm talking about. But again, this strategy is very complex. Very risky. It involves selling naked options. I strongly advise against opening this strategy because you'll lose money since it needs to be managed. You can't just open this strategy and hold it. You need to sell options at the right moment, buy options, work with spreads, hedge options, and possibly buy the underlying asset for hedging. It's complex management that so join us to become professionals. So I always focus on the mathematical expectation. And right now, again, the risk-reward ratio isn't in the investor's favor. I wouldn't buy this stock right now. Again, this doesn't mean that the stock can't rise to $1,000. No, that's possible. But the risk-reward ratio and the mathematical expectation are not in favor of the investor. That's the most important thing I'm trying to convey to you and explain. If you follow the mathematical expectation, you'll always be in profit. You'll earn over the long term. That's the most important thing. Also, we can't forget that earnings season is starting. Very soon, a stock like AMD will report earnings. And here too, we'll be looking at this because these reports can set the tone for the entire semiconductor sector. Yes, of course, Nvidia's report won't be soon, only in a month. But in any case, other reports will help us understand. Where will this stock move? So far, giants like Google and Microsoft have reported well, which is certainly positive, especially for stocks related to artificial intelligence like Invidia, which saw growth. But again, no matter what, I always tell you about the pitfalls and always warn you about them. I also advise you to watch my video where I explain how to construct a portfolio correctly. A new experiment is starting soon where I'll open an account from scratch. In this video, I talked about the principles my portfolio will be based on, what stocks I'll buy. Be sure to watch it. I think it will also be useful for you to learn how to construct an investment portfolio that will outperform indices in the long term. Good luck to everyone.